Good morning. Thanks for joining us today. We have AbraSilver presenting, who just changed their name from ABRA for those of you that may not have caught the release. I think it was a week or two ago. With me today, I have John Miniotis, who's CEO, and David O'Connor, who's the Chief Geologist. Before we get into the presentation, as always, it will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's disclosure on their website. And there will be a Q&A section at the end, so if you have any questions, feel free to input them and we'll address those in the second half of the presentation. And with that out of the way, I'd like to introduce John and David. Congrats on the drill results this week.
Thanks very much, Deborah, and thanks to Adelaide Capital for hosting us. And we're definitely very keen to walk everyone through our story here.
Yeah, I'm excited to hear it. It's been a while, so I'll hand the reins over to you, John.
Thanks again. So yeah, of course, there'll be some forward-looking statements. AbraSilver is a very well-funded silver gold focused advanced stage exploration company. We certainly had quite a transformational year last year in 2020, and thankfully this year is shaping up already to potentially be even more exciting for us. So we definitely have a number of very significant milestones coming up here over the next few months ahead. From a high level, our flagship project is called Diablillos. It's located in one of the most attractive mining jurisdictions in all of Latin America, which is the Salta province in Argentina. This project already has a large silver gold resource base, which is expanding very rapidly here. So at the moment, we have within indicated resource category, we have just about 140 million ounces of silver on a silver equivalent basis. So definitely a good sized project already. And what's important is that that's within oxides, close to surface. And this should certainly be quite a straightforward open pit operation down the road. Now, back in 2018, the company completed a preliminary economic study, which showed that this project has an after-tax rate of return of over 30%. So very good economics. And that was based on a price deck of only $20 silver and $1,300 gold. And so, quite conservative commodity price assumptions. And we're rapidly working here towards delivering an updated resource statement and an updated PEA study within the next 6 months. And so, thankfully, based on all the drilling we've done so far, the signs are pointing towards a potential significant improvement to the previous figures. And really our objective is simple. I mean, we're an exploration company. We're focused on growing the size of the project here, advancing it towards a production decision. And really, Dave and his team at site have really done an incredible job for us, delivering on that front. So in total, we have a 13,000 meter drill program underway, which we will be completing within the next few weeks here. And from that program, and we've just been consistently coming out with very high grade drill results over good widths. And Dave will walk you through those details shortly. And I think, the market's, just starting to take notice here. I think the drill results that we've been coming out with speak for themselves. And from financial and valuation standpoint, we certainly have a very strong cash position. So about $18 million of cash on hand at the moment, which means that we're fully funded for this year and for next year. So 2021, 2022, we see no need for additional financings. So we're essentially fully funded to take this project all the way to a construction decision. Just touching from a high level here, more details on the capital structure. So current market cap is about 200 million. As I mentioned, close to $18 million of cash currently. So an enterprise value of about 180 million or so. Some very good liquidity. That's important to note because that's certainly come a long way from where we were a year ago. That's very important, especially for institutional shareholders. So on average, we've been trading close to $1 million worth of shares just on the Canadian exchanges per day. And so certainly very good liquidity. This opens us up to institutional investors And so, an entirely new investor base here that's really, as we're marketing to them for the most part, hearing this story for the very first time. On the shareholder front, we're extremely fortunate. So we have our top 3 shareholders are Eric Sprott, who led our last 2 financings. We raised $25 million this summer, the summer of 2020. And Eric Sprott was the lead order of 2 of those financings. He became our largest shareholder with a 16% stake. We also have very supportive shareholders in Altius Minerals and SSR Mining. And so combined with management, 40% of the shares are in extremely sticky hands. You can see our share price performance as well. We've certainly performed quite well over the past 12 months. I mean, significantly outperforming the GDXJ and other ETFs, significantly outperforming the silver price. I think importantly, that's why, of course, investors look at exploration companies, is because you get the torque not only to commodity prices, but also to discoveries. And I mean, we'll get into the valuation in more detail very shortly here. I have a slide on that. But essentially, I mean, just given the ounces that we've been finding here and the increase in commodity prices, we feel the value of this project is increasing at a significantly higher rate than our share price. And so where we sit today, despite having a good share price return over the last year, we're still trading at, I think it's 27 cents on the dollar based on the PA using current commodity prices, based on the old resource or the current resource, which hasn't yet been updated with drilling. And so there's a significant valuation re-rate opportunity here. And we think that could come as we continue to deliver on results and then ultimately deliver the updated resource and PA study. So just quickly about the team, we're an extremely lean management team, lean and focused. So it's myself and my CFO based in Toronto. That's our head office. And then we have Dave in Salta, which is where Diablillos is located. So we're very fortunate to have him there. Of course, with COVID and travel restrictions globally, Dave just drives up to site. So there's no international travel required, no border restriction issues, obviously. So, we're very fortunate position to have him easily accessible to site. And then we have a country manager based in Buenos Aires. And that's it. That's the entire company. Of course, we have at site drill contractors operating. I mean, for the PA study, we're hiring consultants, but a very lean, focused team. So my background is on M&A, corporate development. I've been doing this for about 16, 17 years now. I've worked at Barrick, at Lundin Mining, at Orico Metals, and left Orico after that was acquired by Centerra, and then joined Aethon Minerals, which was a predecessor company here. That was a spin-off of Altius, and then Dave and I were running that. We spent about a year looking at different opportunities, looking at assets to merge Aethon with. We came across ABRA and merged the 2 companies together about 14 months ago now, and certainly have revitalized the company ever since. And so really, I'd say the management's background and focus is more on the exploration side with Dave and his team at site, and then really on corporate development, M&A. Dave, did you want to walk through your background?
Okay, yeah, I've got a master's degree from the School of Mines in London. I've worked in various countries, including Australia, where I was in charge of Olympic Dam exploration, the major Olympic Dam project in South Australia. I became the chief geologist of another major company called North Broken Hill Pico. Then I started on the junior scene because I wasn't making any money with the majors, and established a few junior companies. Moved to South America 20 odd years ago and spent 13 years in Bolivia, and established a couple of companies there with Ross Beatty, who's pretty well known. And then when things went ethnic in Bolivia and the investors were turned off, I moved to Chile, established a company there, and we sold that off for in total around about $70 million. We developed $200 million tons of 0.65% copper and 2 grams per ton gold. And then eventually I joined, I suppose I retired, but then came out of retirement again because I got bored, and was asked to do some consulting, and then ended up becoming the chief geologist of Abra Plata, now Abra Gold, and moved to, as John said, about just over a year ago, when we merged the two companies, Abra Plata, with to get a hold of the project.
Perfect. So just touching base on Argentina, because this is a question we get very, very frequently. Of course, the flagship property is based in Salta. And you know, it's very important for investors to understand that the provinces in Argentina hold the mineral rights, and there's a very high variance amongst the provinces. Some are, you know, quite opposed to mining, I would say. You know, it's been very difficult for some projects to advance in certain provinces in Argentina. But on the other end of the spectrum, you have provinces such as Salta, which are extremely pro-mining, very mining-friendly environments, low permitting risk, I'd say overall. And this is evidenced just with, you know, the companies on the ground advancing several projects. So we're, you know, Salta's known for lithium mining for sure, and we're surrounded by lithium mines. But also, I mean, Fortuna has spent $300 million developing Lindero. That's now their flagship asset. Have had no issues there. We're very happy to see them moving that forward very, very well. You know, they permitted that in very short order. That's up and running. So clearly a sign of confidence. They built that for $300 million. Taka Taka was sold to First Quantum for over $500 million. That was a Ross Beatty company. You know, they were sold to First Quantum. This is a multi-billion-dollar project potentially as that enters into closer to construction. So there's lots of activity that's been going on in Salta for many, many years behind the scenes. And it doesn't really get noticed. It's certainly not being reflected in our share price. I mean, people still think Argentina and sort of get frightened away. But when you dig a bit deeper, I mean, there's provinces. Salta, San Juan is another very mining-friendly province. And this is, you know, shown time and time again in the Fraser Institute survey. They come up with annual rankings every year. You know, last year, I think Salta was ranked 4th overall in all of Latin America. This year, it's ranked 1st. So consistently, it's within the top 5 jurisdictions in all of Latin America. This year, we're very happy to see it ranked number 1 overall. But this is clearly a very pro-mining, you know, mining-friendly environment. There's no issues in terms of our drill permits. We get those in record time. You know, permitting this into production, we don't see any issues. There are no communities nearby, and we'll talk about the infrastructure, et cetera. There is actually a number of advantages of being in Salta relative to many other jurisdictions in Latin America. So we're very, very pleased to be in Salta, and I think we're trying to raise awareness that, look, there's differences relative to where you are in Argentina, and certainly Salta is among the best jurisdictions you can possibly ask for. Quickly, just on the silver price, I'm sure most viewers have their own views on silver, of course. Now, this is a chart. It's actually, I'm trying to find the updated version of this. This is from a while ago, but I think it actually shows clearly that silver prices, when you look at previous cycles and how silver prices have moved, we're actually still trending very, very, favorably here. So we're probably about here now, and silver is trending at just under $30. And so silver, the fundamentals are extremely strong. We can get into that in the Q&A if needed. I mean, both on the demand side, from the industrial side, and from the monetary side as well. Supply side, we don't see many primary silver projects coming into production. And so supply-demand fundamentals are extremely strong, and we feel we're very much in the early innings of another silver bull market cycle here, which started about 12, 18 months ago now. And when you look at when Diablillos can enter production, we're out in sort of 2023, 2024 timeframe. People can make their own estimates as to where they see the silver price. But yeah, based on previous cycles, it could be materially higher than where we're at today. And I guess one of the benefits, though, of this project is that it's economic at $20 silver. And so we don't need $40 silver to make this work. This has a high rate of return at current commodity prices, lower than current commodity prices. But the leverage this project offers is quite unique, I'd say. And this is why. I mean, you look at the grades here, there aren't, so this is open pittable. We talked about the large resource base close to surface within oxides. The economics of our project are about 60% silver, 40% gold at current commodity prices. Unfortunately, there aren't just that many silver oxide projects to compare it with globally. So when you look at it from a gold equivalent basis and you just convert our grades into gold equivalent basis, and there are of course many peers there with oxide projects in the Americas, you can see where we rank. So based on the current resource, we have over 2 grams per ton on a gold equivalent basis. The average of a number of projects is less than 1 gram. And then we'll talk about our current drill results and why we think this figure for us could likely grow quite significantly on the grades in the next few months here. So high level, I mentioned there was a PA study completed in 2018, so 6,000 ton per day, 10 million ounces a year on a silver equivalent basis. So this is quite a sizable, open pit primary silver project. We talked about the economics. I guess importantly, you look at the economics, as I mentioned, based on $20 silver, $1,300 gold, where we're trading right now. If you just use those basic economics that were run at those commodity price assumptions, you'll see that the net present value of the project is 337 million. If you divide that by our shares outstanding, we have NPV per share of 80 cents. We're currently trading at under 50 cents a share. And so we're trading at a fraction of the value of this project using the current, but I call it the old resource. We don't yet have the update out. And so using the current resource and using very conservative commodity price assumptions. If you were only to change commodity price assumptions without yet reflecting the updated resource, you see the NPV per share is $1.75. And so where we're trading at, we're less than 30 cents on the dollar here. Again, using the current resource, just updating commodity prices. But the most exciting part here is the updated resource that's pending, the updated economics. We think there's material improvements that could be in the pipeline here. And so we can talk more about the exploration upside. I guess, Dave, do you want to walk through our drill results, including, of course, the drill hole 27, where some of the results are still pending, but certainly we announced that on Monday, and that's certainly raised a lot of eyebrows today.
Yeah, okay. If you want, we can start with hole 27, and you can see that from 163 meters depth to 244, we got 81 meters of 382 grams per ton silver and a couple of grams per ton gold. That intercept starts at 163 meters because that's where we have the analyses from. Shallower than that, we don't have the results back yet. And we firmly anticipate that that intercept will increase and that there is more shallow silver in particular above the 163 meter mark because we've seen visible silver, which is pretty unusual. And so you can see that within that, there are some spectacular sections. There's 17 meters of 1,466 grams per ton silver. But so that, of course, enhances the silver grade of the deposit. That intercept is so good because we think it's so good because it's at the intercept of a couple of breccia systems, of a couple of trends of silicious breccias, which come up feeder zones. And where these breccia systems intercept, you get better ground development and higher grade silver and associated gold. But the emphasis of our drilling really is twofold. One is to expand a shallow resource, which will convert waste into ore and therefore really improve the overall economics of the open pit. And the other is to expand the oxide gold zone at depth. beneath the silver zone. So you can see that those intercepts there of silver are from 163 meters on down, whereas if you look at hole number 10A, which is the line above that, you can see there's an intercept there of 47 meters of 3.37 grams per ton gold. Now that's the gold zone that we're aiming for to expand. So that's between 210 and 257 meters depth. We think we can expand that considerably, and we have been doing so with our drilling to try and expand the oxide gold resource, which would be amenable to treatment in the same circuit as the oxide silver resource. Beneath those, underneath the oxides, you get the transition zone and then into sulfides. And you can see in hole 20001, a little bit higher up in the table there, there's a transition zone with a 14-meter intercept, and then beneath that a 15-meter intercept of sulfides, and that 15-meter intercept of sulfides has 5% copper and 2.35 grams per ton gold, but in that particular case has 658 grams per ton silver. Those are the sorts of intercepts we're hoping to get to expand both the gold and the silver resource in the oxides. If you look down at hole 20020, you can see a shallow intercept there between 3 meters depth and 16.5 meters depth. So the 13.5 meter intercept of 4.47 grams per ton gold and 179 grams per ton silver. That's particularly important because it's so shallow, and previously drilling in that area was wide spaced, and so that wasn't included in a resource. That material there was one of the intercepts that was too far apart to be called a resource, and the rock in that zone was classified as waste. We're doing detailed drilling now to intercept mineralization there to create a resource which will convert the what was called waste into a resource, and any value that we have there will improve the value dramatically of the economics of the open pit, because it will automatically add value to the pre-stripping. Now, I'll just make comment that that the study that was previously done in 2018 had just under $100 million worth of pre-stripping to get down to the mineralized zone. But if we can reduce that by creating resources such as hole in 20020, then we will either reduce or eliminate that $100 million cost to begin with.
I mean, maybe just in summary here. So, this is quite an important slide for us for sure. There's obviously a lot of figures here, so it's quite easy to get lost. And, there's certainly a number of high-grade intercepts. I've had to cut out a number of high-grade intercepts to make room for these. But I think it just reflects that, time and again, I mean, we're coming out with some solid high-grade intercepts here over very good widths. And, you look at the gold equivalent grades and compare that back to our current resource grade of, 2 grams, close to 2 grams gold, or compare that to the peer group average of less than 1 gram gold within oxides. You can see that we're adding some very highly economic ounces here. Most of these will be within a defined open pit. A number of these we're converting waste, as Dave mentioned, into ore. And so, we're keenly looking forward, of course, to coming up with the updated resource. But, it's also important just to keep in mind that these are only the results that we've announced to date based on only a 13,000 meter drill program. And so overall, it's a pretty modest sized program we have going on. There's 2 rigs, $4 million budget. Certainly some of our peers have, 100,000 meter drill programs in place. And so, overall, it's just important to note the efficiency of our drill program here, based on that $4 million budget, just shows that we're clearly adding, many multiples on our exploration investment. And there's certainly a lot more results to come from this 13,000 meter drill program. And then we'll be expanding that, of course, continuing on drilling even beyond that. So we're super excited with the results to date. Of course, we're now waiting for the remainder of hole 27. But, even beyond that, there's several high-grade intercepts here that we feel could make a material difference the economics of this project.
Okay.
And maybe let's, Dave, you want to talk about just high level sort of the.
Yeah, this is a good slide to talk about, to explain that table that we've just been talking about. Number one, at the bottom there, is the potential for deeper high-grade gold, both in the oxide zone and then down in the underlying sulfide zone. So if you remember, we got 4 grams per ton material over tens of meters in the oxide zone at the bottom of the pit or beneath the pit. And then, as I was mentioning, in zone number 2, which is not a resource, which wasn't classified a resource, but will be classified a resource based on our close space drilling, we're getting some high grade, well, reasonable grade gold and in that zone. So we will come up with a resource in zone number 2. And then in zone number 3, which is on the right-hand side of the screen there, with that large arrow pointing out towards the right-hand side, that's the northeast of the open pit margin. That open pit margin, it was based on the study in 2018 and on the grades of the prices of silver and gold at the time, which was 1,300 per ounce of silver, of gold, and $20 per ounce of silver. We will plan, we have started a drilling program in that zone number 3 to expand the open pit shell and to expand the tonnage and grade of the resource out towards the northeast. So that's something pending. And when we've done this 13,000 meters of drilling, we will continue drilling in that zone number 3.
So we have some more detailed cross section. I mean, we can save this for the Q&A if anyone wants to get more detailed. But Dave, you want to talk about maybe the infrastructure?
Yeah, well, the infrastructure is, the project is at just over 4,000 meters, which means there's no alternative land use to the zone. And what is being developed around the project, around the Diablillos or Oculto, is a series of lithium projects, and there's historical borax mining in the area. So the closest community of any size, and it's only a few hundred people, is a place called Pastos Grandes, which is about 100 kilometers to the north of us. And we employ people from Pastos Grandes as technical assistants at our project. So the people in the area are dependent on mining and very favorably disposed towards the development of new mines. And because of the development of the various lithium projects around, the infrastructure is pretty good. There is a pipeline, a gas pipeline, which was specifically put in to take gas to Chile, but is being also used for gas for other projects. And that gas pipeline is being considered as an alternative. We've just employed someone to do a comparative study of the various sources of power. And that's really is a trade-off. It boils down to a trade-off between natural gas in pipelines and solar farms. So that's underway. And then with regard to water, which is something that people tend to worry about, there's been 5 water wells drilled, which were back in 2007, which outlined a supply of almost entirely the 6,000 tons per day that we would need. However, we've done some geophysical surveys to identify aquifers, and we'll be drilling those next month. So we're putting in another 5 holes next month to try and secure the adequate water supply for the project. And I might also add that we're doing comprehensive metallurgical test work as of now to try and improve the recovery grades of both silver and gold, as well as copper, actually.
Great. And so just quickly summarizing, I mean, looking ahead here, of course, our focus for the past 12 months has been on drilling. So we're about to complete drilling of the entire 13,000 meter drill program. Now, because of the delays with COVID, as everyone I'm sure is familiar across the industry for exploration companies, we still have a significant amount of drill results, assays pending at the lab. We still expect to have another 20 or so holes here coming out from this 13,000 meter program. Those should come within, weeks and unfortunately months ahead. And so, a lot of drilling information to come out here imminently. We'll then look to, expand straight into our phase 2 exploration program. We're just working on finalizing that. The details will be announced when that's ready. But from the phase 1 program, once all the results are in, we'll put out an updated resource statement and an updated PA study. And we expect that could be completed within the next 6 months or so here. So that's one of the key catalysts that we're very keenly awaiting on. As you can tell, we're very excited. We think that's going to raise a lot of people's eyebrows, I would say. Just, as that's obviously going to incorporate all the latest information. Now, in addition, we also have some earlier stage projects in the portfolio as well. So we have 4 other projects, 3 of which I'd say are active. So in Chile, we own 100% of a large land package called Arcas. It's over 50,000 hectares. We own 100% of this. We've partnered up with Rio Tinto, and Rio can earn up to 75% by spending $25 million on exploration. And we expect Rio is going to commence their exploration program very shortly here. And then similar size projects again in the San Juan province in Argentina. So again, 50,000 hectare land package here. I believe on this project, on the Chilean side of the border, you have Barrick drilling away. This property was formerly owned by Teck. Some very good historical intercepts. Again, copper gold focus. But in this copper price environment, we think this could be a very highly, attractive target. So we'll either look to bring in a partner or drill it ourselves before the end of the year. And then we also have another project called Santo Domingo as well. We'll look to commence drilling there. So multiple opportunities here to add shareholder value. But without question, Diablillos is the focus. I guess this is a summary slide. Maybe we'll be happy to open it up to questions now.
Sure. We do have one audience question. I've got some as well, but let's start with the audience one. And anyone participating, feel free to input any questions in the Q&A box at the bottom of your screen. Okay, so I'm trying to align your drill holes with your zones. In particular, drill hole 20020. Is it in zone 3? And did the drill go deeper than 16.5 meters and not encounter any significant results?
Sorry, which drill hole was that? 20003?
20020.
Also, John, if you like, you can open the Q&A box.
20020 is a shallow intercept, John. It's the 4th from the bottom there.
Okay. Well, I'll let you answer that, Dave. Go ahead.
Well, if we look at the cross section, if we look at the long section, you'll be able to see where it is.
The shallow zone here. This one. Yeah,
it's 20020 is one of those in red. This is a long section through the ore body, focusing on shallow intercepts. So the historical shallow intercepts are the ones without the red circle ovals around, and the ones that we've drilled in this campaign have got the red ovals around. So you can see that hole 20020, the intercept is marked there where John's pointing now on the top left-hand side of the screen, and it's a shallow intercept within 100 meters of the surface, and that will help us. That will be part of the basis of the search ellipse, which will generate blocks of the new resource, of the shallow resource, which was previously, as I mentioned, classified as waste.
Okay, I think that answers the question. On your milestones slide, it looks like in the second half of the year, you're considering skipping the pre-feasibility study and going straight towards a bankable. Is that accurate?
Correct.
And what will influence that decision?
Yeah, so this will be the second PA study. So of course, there was one already announced back in 2018. So we're updating that. And so a lot of the inputs here are going to be well past the PA study level. So for instance, I guess, Dave, you want to talk about sort of the metallurgy sort of test work that's been done to date. This resource is already within an indicated category, the existing resource. Of course, we're going to expand that. So it's already within the indicated category. We feel a lot of the inputs are going to be already done almost at a pre-feas level. And so we think it's quite logical. Just if you're looking to fast track this project, I think it's proven it's already an economic project based on the current size of the resource. And so, we don't want to spend 3 years here just doing study work. We want to advance this as quickly as possible. And so we'll look to likely fast track this straight to a feasibility study. But Dave can walk you through sort of some of the, I guess, especially sort of the met test work, even the hydrological on the water studies. It was already shown that we have sufficient water, but we're further going to be doing some drilling on that. So we're really this is quite an advanced stage PA study for sure. But Dave?
I just might mention that number one, we're drilling to increase the resources. We're drilling to increase the content of silver and the content of gold. We are going to be increasing the content of silver in terms of grade, probably not increasing the tonnage much because that's been drilled out and that's shallower, but we'll be increasing the tonnage to some extent, but we'll be increasing the grade of the current resource. We will also be increasing the tonnage and grade of the gold resource. So we're starting off with a base of 730,000 ounces of gold, and we'll be increasing the tonnage and obviously increasing the grade from the holes that we've been getting. So we're practicing now on developing the search ellipses and the required parameters for developing a new resource. And we will be we're now canvassing several consulting groups to work with us to get an independent assessment of our new resource estimate. And that's starting now and should be ready in 2 or 3 months, depending on how soon we get the results of the analyses back. At the same time, we're doing a very comprehensive metallurgical study. We've employed a very good consultant metallurgist, and this will include various aspects of the recovery of silver and gold and the treatment of the tailings and the mineralogy and every aspect. And that's going to be very comprehensive. And John doesn't realize how expensive it's going to be. It's going to be a very comprehensive and definitive metallurgical test, which will be very useful when it comes to moving the project up towards a feasibility stage as opposed to a preliminary economic assessment. And then, as we mentioned, we'll be doing the water well drilling. So we'll define sufficient water. We're fairly confident we're almost there to define sufficient water for the operation. And then the parallel study, of course, is the study of the power alternatives, which I mentioned. The gas pipelines. There's a complicated system of gas pipelines in Argentina, 2 of which cross past the area, 1 of which is about 34 kilometers north of us, and they go towards Chile. They're taking Argentinian gas to Chile, but the mining projects can siphon off gas from those, and it'll be a combination of gas and solar farms. And we're leaning more and more towards solar farms because that's becoming more economic as time goes by.
That's very ESG sensitive of you as well. So just wondering about operating at that altitude. You said 4,000 meters, is that correct? What are the
4,100 actually.
What are the challenges of mining at that altitude?
Well, when you get to around about 4,000 meters, I mean, there are no fatal flaws at working at that altitude because there are numerous mines up to 4,500, 4,600 meters that work. We don't have a problem here with weather in that we don't get snowed in. It's not in the high Andes where you get snowed in and you can only work, you can only explore for about 6 months of the year, and your operations are reduced considerably during the winter months and the threats of snow. We don't have that here. We get sprinkles of snow which evaporate off pretty quickly. But there's a lot of wind in this area. So that restricts your use of wind power. You can't use wind power here because the wind is too strong, which is ironic. But of course, there's no problem with solar panels. There are no real problems other than the fact that when you're at 4,000 meters, your equipment operates at around about 65 to 70% efficiency, and so do your geologists. I mean, the consumption of oxygen, there's not enough oxygen there for everything to work at 100% capacity. So, I mean, an internal combustion engine works at around about 65 to 70% capacity at that altitude. But that doesn't kill you. That just means that you use more fuel.
And can you drill year round?
Yes, you can. You can drill year round, no problem. We have been drilling year round. We only had a 2-week break or 2.5-week break for Christmas, basically.
Yeah.
Okay, and then maybe we can walk through some timelines beyond just the catalyst for this year. So if you do decide to go straight to a bankable feasibility study, what sort of timelines do you think, like when do you think that would be out? When would you be making a construction decision, et cetera?
So our estimate right now would be roughly, say, 18 months to complete the bankable feasibility study. So of course, we'd have to augment the resources into a proven probable category. So there'll be a lot of parallel activities going on. Same with the environmental baseline work that's going to be needed for the permitting. We expect to start that already within the next few months here. And so, you know, we're conservatively giving 18 months, which is probably longer than most would assume, but because we're skipping sort of that pre-feas stage, we're just giving a slightly longer timeline to get the feasibility study completed. At the same time, of course, we'll, like we said, we'll drilling, augmenting the resources up to a reserve category, completing the permitting work. The environmental baseline work is a long lead time item. And again, within that 18-month time period, you know, we should have permits in hand, feasibility study in hand, and we're fully funded to get all the way to the finish line here, which you can then use to make a construction decision. And so, you know, once the PA study's out, 18 months from then is when we expect we could have the next study completed and the permitting process wrapped up as well. So we're talking about early, you know, I guess 2023. 2 years from now, 24 months from today, which would be Q1 2023.
And assuming everything goes as planned and you meet those timelines, in terms of construction, given that it is at that altitude, does that take longer to construct than in a typical mine? How does that work?
So in the PA study, it was an 18-month construction process. And so, yeah, that was it's an open pit. I mean, it's quite straightforward. I guess, Dave, any additional color you would add there?
No, I mean, the topography is not severe. You don't have to build a complicated road system to get there. We already have a road system. It's pretty flat, actually, except for the hills. Now that's an Irish state.
You can see the photo here. That's where the camp is. Yeah.
So that hill behind the camp, we're standing on a hill opposite the camp right now. We're taking the photograph. And that hill is, the topography is ideal for an open pit because the mineralization follows the crest of the ridge. But access is along these fairly flat valleys.
And given the lithium mining in the region, I'm assuming you have access to skilled labor?
What was that, sorry?
Oh, sorry, I just said, considering there's lithium and I think you said borax mining in the area, you have access to skilled labor force?
I wouldn't say skilled labor. We have access to semi-skilled labor. But then Salta is a mining town, and Salta's got a population of about 500,000. And so I don't see any problems with labor. Right now, we're employing 4 contract geologists who actually are very good, who graduated from Salta University. So I don't see a problem there.
Okay, and can you touch on community relations in the area as well?
Well, to start with, there aren't any communities, but the ones that are, I mean, as I say, the closest place is Pastos Grandes, which is 100 kilometers away. It's only, I think, 300 or 400 people there. They are largely employed in the mining industry. There's borax mining been going on for decades, and the lithium mining is just getting going. And so the people there are employed by the mining industry. A larger community, which is one of, I don't know, a couple of thousand people, I think it is San Antonio de los Cobres, which is about another 50 kilometers away, and that's where the sealed road ends. They are also very much involved in mining. So mining is in their blood. I mean, San Antonio de los Cobres means San Antonio of the copper. It's an old copper mining district anyway. So yeah, we have a lot of support from the communities that do exist. I mean, and there are not many of those.
And I guess, Deborah, yeah, you mentioned ESG, and that's of course front of everyone's mind these days. But you can see, I mean, look at the topography here. Look, I mean, this is barren land, no alternative land uses, no communities nearby. I mean, if there's anywhere ideally to put an open pit, it's right here. I mean, this is, there's so from an ESG perspective as well, of course, it's going to create significant employment, significant opportunity in the region. And you're not relocating villages, you're not cutting down forests. I mean, you're just at high elevation and putting the resource here to use and creating opportunities for people.
As a mining engineer friend of mine said, John, it's only good for llamas and geologists.
Those are the only people that would go up here for sure. Yeah.
It seems like a very interesting region of the world. Which also kind of ties into, so you are undervalued versus peers, and I think the story is generally unknown and underfollowed. Yeah. Why do you think that is, and what steps are you taking to try and close that gap?
Yeah, no, so that's that's for sure. I mean, we're significantly undervalued. I mean, going back to that slide, I guess, here on the economics of the project. So first, and I guess before we, sorry, hold on one sec.
So I guess as a follow-up question, do you think being in Argentina and some misinformation about that plays into your valuation?
Without question, no doubt. I mean, for sure. I mean, so we're working hard to dispel the myths there. In Argentina, there are some large projects in Chubut and in Mendoza and in other provinces that haven't been able to advance. And so, Western media kind of picks up on that, and then people just generalize all of Argentina. But when you look at the facts, I mean, we mentioned already who's operating in Salta, but operating within Argentina, you have all the majors there. So Barrick's there, Goldcorp was there, Glencore, now Newmont, of course, Glencore.
And they've been operating for decades over various changes of government. So there's
no issues. And so this is already, this is not going to be the first mine in the country by any stretch of the imagination. This is a proven mining jurisdiction, no issues. And so unfortunately, just the Argentina factor plays a big portion in that. And, time and again, with the Fraser Institute coming out, we're actually going to be releasing a video shortly here as well, just touching on Salta as a region and in Argentina generally as well, to help dispel the misinformation or just the perception. It's not even misinformation, it's just perception that exists. I think that's going to be key. But also, it's that the share price here, even though, I mean, we were up 750% last year, it's not like we're underperforming, but the value of the project is clearly rising at a greater rate than our share price has. And so, I mean, I've said it before, for every dollar increase in the silver price, that adds $30 million to the project based on the existing resource. That's going to be adding more, of course, when we expand the resource. And our share price doesn't go up by $30 million if silver price is up. I mean, we're at 200 million market cap today, I believe. And so, the share price has been doing well, it's been going up, but the value of the project, so you look at, close to current commodity prices, this has increased significantly from where it would have been using, price decks from a year ago. So the share price is doing well. But yeah, we just continually marketing, spreading the word that this is a significant mispriced, in my opinion, opportunity. I mean, there's clearly a pretty scarce project here, good size, good economics, excellent drill results to date that will lead to an updated study in pretty short period of time here. And that's not being reflected. You're paying for a fraction of the value of the PA study based on $1,300 gold. I mean, it just doesn't seem justifiable, especially given that we're in a great jurisdiction. It's not, this is a decent jurisdiction. We're in a very, very favorable mining jurisdiction.
And I think, John, comparing Argentina, because it's on a province by province basis, and each province manages its own affairs with regard to mining, has its own legislation, etc. with regard to mining. It's like comparing Argentina is like comparing the states with the United States. I mean, you wouldn't mine anything in Maryland, for example, but there's no problem mining in Nevada. And so it's like saying, well, it's going to be pretty hard to mine in Chubut, particularly amongst the ski fields and glacial lakes and the beautiful forests. But there aren't any of those around where we are mining.
Well, I think it's an interesting project for sure. And I think, like you said, part of your undervaluation is probably just not being that widely followed. I don't believe you have analyst coverage right now. Is that correct, John?
Correct. Yeah, no, so we're working on that. I mean, we've been marketing significantly, with a number of desk presentations. We're on a number of watch lists. We're in close contact with a few analysts who are launching coverage. We're in the process of doing that. But yeah, certainly nothing to date.
Yeah, being fully funded for the next year and a half probably doesn't help your cause much, but I think it does create an interesting trade or investment thesis as well. Yeah, I get it. I think I had one other question from the audience. Yeah, who would you compare yourself to in terms of other silver projects globally?
Yeah, so I mean, there are a number of silver exploration companies, but when you narrow that down, apply various filters, of course, this is silver gold. So just primarily, 100% precious metal, 6% silver, 40% gold. So that would rule out a number of peers that are, polymetallic, silver, lead, zinc, for instance. So when you narrow it down, you look at the size of the resource that we have, 140 million ounces or on a silver equivalent basis, or over 80 million ounces on just a silver basis, close to 1 million ounces on gold, and that it's already in a PA stage. I'd say the one of the companies that comes to mind is Silvercrest, and they're of course seen as a fantastic project, fantastic company. They've done extremely well. They're certainly at least probably 18 months, 24 months ahead of us. They have a completed feasibility study and entering production. But, we have a similar size resource, similar cash cost. We're in the lowest quartile here. They're certainly higher grade, of course, because it's underground. This is open pit oxide. So no two projects are obviously identical. But in terms of comparable projects, I'd say they'd be the closest one. In terms of market cap, we're nowhere near them. I mean, they're probably 10 times our market cap. And again, that goes to show the opportunity that exists here. This is one of the handful of projects that are economic, that are of this size, this scale, this advanced, with the proven exploration upside. But you look at our peers' similar market cap levels, I'd say there aren't many at all.
Mm-hmm. I noticed that you have a number of warrants outstanding that are in the money. Are those who owns those warrants, and do you know what the intention is with them?
Sure. So there's been various financings obviously done along the way. And when Aethon, so AbraPlata acquired Aethon, so Dave and I were running a company called Aethon Minerals. Aethon had a large number of warrants outstanding as well. So those are from shareholders that have participated in the various financings completed to date. So we have close to 200 million warrants. And those are all in the money, just given the share price performance. And so those, as they're coming in, generating some good cash for us. And that's why we still have $18 million in the bank, which is where we were at year end. So we're just financing our activities from the warrant proceeds to date. I'd say, I think about 22 million warrants are set to expire by the end of this year. And then like 75 million by the end of 2022 and another 75 million by the end of 2023. And, so that's going to bring in another $40 million of proceeds. And when I say we're fully funded, that excludes the warrant proceeds. So we don't budget for that, obviously. Some of the warrants have accelerator clauses, so we can accelerate them, but we have no intention of doing that at this stage. I mean, we have more than enough cash. And so, as investors choose to exercise the warrants, we're getting in the proceeds. And, again, we're fully funded for all the, for really the activities we have planned for the next 2 years here.
That's great. Well, I don't see any more questions, but I will give you a final opportunity to just maybe list the value proposition and a few of the upcoming catalysts that you're most excited about.
Sounds great. So clearly, I think our focus is shifting here from exploration, where we're completing the program, to finally being able to get more of these results coming in. And then clearly, we feel for us, a major catalyst will be coming out with the updated resource, coming out with updated economics here that reflect the current situation. And we think that could be a very major value driver. Because the share price is clearly not reflecting in the results we've been announcing over the past several months here. So that's our key catalyst for this year. Of course, we have the other projects as well, which are earlier stage. There could be discoveries there, which could become material. And so, we have a very busy year ahead of us here with continuing to explore at Diablillos, advancing this into a PA study. And then, seeing next steps from there, which could be ultimately the feasibility study. So
I might just add that.
Go ahead, Dave.
I might just add that we've been talking about Oculto, which is the deposit within the Diablillos block. And Oculto is the deposit on which we are upgrading the preliminary economic evaluation and moving possibly to a feasibility study. Within that block, there are more projects that we would like to start drilling. We will start drilling once we've done this 13,000 meters. You can see there's in what's that ring there at Oculto, that sort of lilac ring or whatever it is. There's a boomerang-shaped thing. Those are satellite deposits. And just to the north of Oculto, there's been several drill holes drilled before, but we've just drilled a hole there, number 19200019, I think it was. Which got 10.5 meters of 1.5% copper plus some silver and gold. So that's within 500 meters of Oculto itself. If we can develop a shallow resource there, this is a shallow intercept, that will augment any development of a project at Oculto. And then beyond that, 4 kilometers to the northeast, there's that what's called the porphyry complex, the porphyry zone. And there's a series of old drill holes which got pretty interesting results of gold in particular, overlying porphyry potential. So what we want to try and do there with these 2 drill rigs when we take them away from Oculto is to develop some more resources of shallow gold mineralization in that zone there, and maybe drill a few deeper holes to look for porphyries.
It's very interesting.
That's what excites me. I mean, once we get away from Oculto, I mean, all of this, it has to be done. All of this well drilling and all the rest of it, and studies on energy. Well, that's all essential and has to be done. But there's nothing like drilling a hole and getting a new zone.
Yeah, definitely. It's good to hear too that there's some other targets and exploration upside there. Okay, well, we're coming up on the hour. Is there anything I didn't ask you that you wanted to talk about?
No, I think that was great.
David, your personal life, anything?
We can talk about that. We'll talk about that later on over a glass of wine, maybe.
Yeah, hopefully by the end of 2021, Well, thank you both for presenting. I think it's a really interesting story. It's undervalued. It's in an area that I think is very interesting. There's lots of growth, lots of catalysts, good management team. So yeah, thanks for presenting. If anyone else has any questions or would like to get a copy of the presentation or anything like that, just feel free to reach out, and everyone have a good morning.
Perfect.
And
thanks very much
for the opportunity.
Thanks for the opportunity.